Hey, what's going on everyone? Matthew from therighttrader.com back again with another video. Today I'm going to be talking about how to analyze stocks the easy way. It's going to be the fastest and quickest way to do stock analysis, which you'll be able to do just by looking at a chart. You don't need anything else for the most part, minus a little bit of common sense, of course. But the general idea is that just by looking at a longer term view of the stock chart, you can get more than enough information to know how the company is doing. Now, there are a couple caveats that I'm going to mention. The first one being, this is a strategy that's going to be a little bit more geared towards long-term buy and hold investing. It could also work for trading as well. I'm going to talk about that later, but the key thing is you're going to want to do this on companies that have a market cap of over $5 to $10 billion ideally. So you don't want to do this with smaller penny stock type companies because for the most part, they're going to be less trustworthy and more unpredictable. So it's a strategy that's more geared towards, medium to big sized market cap companies. And also, common sense things don't go out the window here, right? You still want to know what the business is. You never want to invest in something that you know nothing about. And you also want to have just a general idea of competition, what that might look like, how much of a threat is the competition, and your basics, right? Your very basics. You don't need to go digging through financial sheets like some people do with fundamental analysis. Like I say many times, right? Fundamental analysis is a little bit flawed in my opinion because you're not going to get the same amount of information as some of these big investment banks have, right? You have a very minimal amount of financial information that you're going to be able to base yourself on. And you're competing, if you're doing it fundamentally, with these institutions that have people who are experts digging through financial statements to get an idea of how things are going. Why would you go through that when you can just take a simple long-term view of a chart and get a literal physical representation of how the company is doing? So this stock over here, Next Era Energy, is a very good example. Now, this is sort of a picture perfect chart, exponential chart. It doesn't get much better than this as far as an uptrend is concerned. But I think that it makes a really good point, right? Where what you're going to want to look for, and let me say that you want to take the simplest charts possible to do this. My favorite when I'm doing this is just look up the stock on Google. So, put in the name of the ticker and then stock, and you should find a little market summary like this with a graph. This is really nice because you can actually just drag your mouse across and you'll be able to see, the percentage increase. And of course, you can get a really easy, simple, long-term view of the stock itself in a very clean manner, right? So I think when you're doing this, it's best not to go on more advanced charts like tradingview.com or even on Yahoo Finance, right? Unless you go on the small one here and take a look like that. But I think the best is going to be your simple Google stock chart. And what you're going to want to look for is just a long-term steady uptrend, right? We don't want really any signs of it having ever broken that long-term uptrend for the most part. Now, like I said, this is a very special, kind of extreme example of a stock that's literally pretty much only gone up over time with very, very minor dips. So you might not find stock charts as clean as this, but, another more common example might be Apple stock, right? Where you're going to see that we have that same long-term uptrend. Yes, of course, we did have some dips here and there, but overall, what did we see? We saw the stock go up time and time again over the course of the years, right? Although there was some dips, the general pattern was upwards, and it didn't break that uptrend line, right? It didn't break that pattern upwards. So if we were to draw this out, right, on an actual chart, for example, what you're going to want to see is your uptrend line, right, like this. And I'm going to drag this out so you can see, what you're going to want to see is something where the price itself has just bounced up and down, but has stayed above the uptrend line, right? Maybe sometimes it dropped a little bit below it, but very quickly it came back up. And in that case, it's nothing really to worry about. But you need to be very, very careful when and if the stock ever breaks a long-term uptrend line. That could really be a sign that things are going to get bad, right? So whenever I'd say a long-term uptrend line is broken, that is maybe really time to consider exiting the stock at that point because there is a fair chance that things are going to get pretty rough ahead, so to say. So that is definitely something I think you should keep in mind. But like I said, the idea here is that by looking at the long-term uptrend line and long-term chart, we can see a very nice picture of the company, right? And hopefully this is in too much pointing out the obvious, but I think people really underestimate this, right? They want to do a bunch of analysis when the basic is, how is the company doing over the long term? Just take a look at the chart, right? You don't need to go digging through any financial sheets to see that. Now, let's take a look at some examples of what you don't want to see on a chart. A good example of this would be American Airlines. Now, there is sometimes opportunities that you can see by looking at a chart that's maybe not as good as a long-term uptrend, steady uptrend, but that could also provide some opportunities. So overall, when I look at a chart like this, the first thing I think is I won't be a long-term investor in a stock like this. Why? Just because it has too much inconsistency and too much, very wild swings up and down, right? We got a big crash, then a big move higher, and then another big crash. I don't want to be in a stock like that long term, right? Not even for maybe a few years. This would purely maybe be a trade opportunity for me where I'd look at this and I'd say, okay, well, the stock has fallen sometimes and has taken some pretty big dips, but when it's very low, maybe around $1, it usually tends to bounce, right? It's already done it twice. So if the stock chart is low, I might think, okay, well, you know what? I'm willing to take that risk here and get in at a cheaper price, hoping that it gets another move back higher like it's already done before, right? So we're basing our thesis here on the history of what's happened previously. But overall, right, you look at this and you should be thinking, okay, well, this is maybe not a stock chart and a stock that I want to be in for the long term, right? So very, very key here. Now, let me give you another example, right? You may find some stocks where it's pretty flat and you don't really know what to think about it, right? For example, AT&T obviously has gone up slowly but surely over time, but for the last 20 years, it's been pretty flat, right? Well, you got to keep one thing in mind. It's paying a very high dividend, over 6%. And that's a good thing in my opinion. I'd say don't expect a stock like this to be like Next Era Energy that we just talked about, where it's just gone up skyrocketing over time. Obviously, Next Era Energy pays a small dividend, but when a stock pays a 5% plus dividend, you're probably not going to see as much of a stock price increase. So this is normal, right? Flat price action for a stock like this with a high dividend doesn't necessarily mean it's a bad thing. So you do have to keep things like that in mind. However, let me give you some examples where the price of the stock is flat and that may be a little bit more worrisome. It's going to be something like Twitter, right? Where, it's gone down a bit, but overall it's just kind of been flat and sluggish for quite some time. And that's maybe something where you want to think a little bit more, well, this looks like a stock that has a history of just being, not really able to get those power moves, so to say. Not that it might not necessarily get that in the future, but if it is going to happen, right, and we'll do a little quick technical analysis here for Twitter, just to show you that it's all about trends. What I'm trying to say, it's all about trends. Excuse the very messy chart here. I'll go ahead and clean things up in just a second. I'm going to go ahead and zoom out here because there's just one thing where that could change the general idea that we're seeing of, okay, well, Twitter, it's been kind of flat. I don't really want to get in a stock like that. Fair enough, right? That's exactly what I'm saying. And keep in mind that nothing in this video is financial advice, just my personal experience and opinion. But for Twitter, the only time that you might want to consider getting in, right, if you really want to be safe with things, is if it gets back above its downtrend line, right, which is really causing the flat and weak price action here. So as you can see, the price is moving, lower or staying pretty flat due to this longer term downtrend line over here, this pink line. So if at any time the stock breaks above that, right, and is able to really get above past resistance, so here above, $50 probably, then at that point, right, it's maybe a little bit more reasonable to consider getting in on a stock like this, right? But otherwise, I think that it's maybe best to avoid, especially if you're thinking more on a long-term basis, right? So that is another thing that I wanted to mention there. And once again, it can give you a lot of information, not only on just, oh, it's going to do great long-term or it's going to do bad, right? It can give you more specific details. For example, a stock that I find pretty interesting to look at is Coca-Cola, and I've seen a couple other stocks like this that were big stocks that you would think always do good, but taking a look at the chart might give you some details that might not actually be true, right? Although Coca-Cola has done great, right? One of the best stocks out there overall, and I'm not saying that it's a bad stock, but you would think that a stock like this has never went down. Well, if you look at the chart, right, from 1998 all the way to around 2006 to 2008, it was actually in a downtrend. And that tells me that, okay, well, whilst Coca-Cola might be a great stock, it's maybe not a stock that's completely immune to getting a downtrend because it's happened before. And if I'm not mistaken, McDonald's got a very similar move, right? Which is not something that you'd expect. But looking at the long-term chart, you can get some insight and kind of be warned of maybe potential price history that could repeat itself. For example, same thing here. McDonald's went in a downtrend from 2000 to 2002. It dropped 63%. So it isn't immune to downtrends, although it's gone up for a very long time. It isn't like Apple or Next Era Energy that really have never broken their uptrend for the most part. That, I think, is really key to be able to get insight like that. And the final example I'm going to show you is a stock like Tesla. Tesla is a pretty interesting example because what this one is going to show us is, once again, very nice uptrending price action, right? Where it's gone up very nicely, and it even started skyrocketing here this last year, but it went in a range-bound price action pattern for several years, right? Basically 6 years of very flat price action where, it was just kind of going up and down for the most part, and then it got a big breakout. So once again, if I look at a chart like this, what am I thinking? It's going up over time. That's something that I like, but it's also getting range bound for quite long periods as well, and I think that's something that could happen at any time, right? Something just to be aware of. It happened as well more towards the beginning. It was going up very slowly but surely. However, kind of flat as well there. So a stock that can be prone to maybe getting into flat price action periods where it stays in a range. And yes, right, we've seen the history that it has tended to break to the upside of that range, but just to be aware that it has been in those kind of tight price bound type of movements, right? And that's something that if you go maybe on a little bit more of an advanced chart, you're going to see that, right? Let me just clean this up a little bit, but actually I don't even need to. There was two main times where Tesla here actually got in ranges over that longer stretch that I showed on the more basic chart. If you look a little bit more accurately, it was actually two ranges that it got in, right? Let me go ahead and draw this out with the brush tool so you can see this really clearly. You're going to see these two ranges that it got in. So the first one was over here between $150 to $250. That's going to be this range right over here. And then we had another range that lasted for over a year, and that was from $250 to $400. So two big kind of extended flat stabilization periods, which isn't a bad thing, right? That's not a bad thing, but it's just something to be aware of that, don't think that this stock necessarily has the steadiest uptrends every single month, because that's simply not been true, right? It has had flat periods. And like I said, even at the beginning here, it was pretty flat, although, that was still in the beginning of a company. Maybe there were some different circumstances there where it was, just getting started and people didn't know much about it. But, we've seen that history of a couple range-bound times that lasted, several months to a few years even. So something that I don't think you should overlook, although it's gone up over time, just to be aware maybe of some specifics that may have happened in the past that we can see, right, just by looking at a very basic chart. Like I said, the Google stock chart is all you need to just get a brief overview of how the company is doing. And like I said, don't throw the fundamentals out the window completely, right? You still got to think very briefly, what's the competition looking like? Is this company big enough that I can even trust just looking at a stock, that it's not just a penny stock that might be going up for whatever reason, but you want to see that it's a company that that's been around and that has a minimal of amount of size, right? Like I said, $5 to $10 million in market cap, that you can really have a little bit more trust behind it than just your average random stock that might be very small. And although it might be doing good, that's the one thing. You just don't want to look at any stock and see, okay, it's been going up, it's safe to go in, right? That's not what I'm saying. Just a little bit more common sense than that is of course needed. But like you saw, looking at the long-term picture, right, for stocks like Apple and Next Era Energy, and there's a bunch out there, right? There's some that are smaller. Obviously, this may seem easy to look in hindsight, but you can look at some more recent stocks, right? One that I think is going to be a future stock, future titan to just really go up and up and up, because that's the pattern that it's beginning to show here, is Shopify. If we look at it, right, although it just started trading in 2015, it's been doing great. And not only has it been going up, it's been going up in this very steady uptrend where it hasn't broken that uptrend line. Once again, very key, like you saw me talk about. And like I said, I mean, that's really something that you gotta look for. And when you see it, it can really inspire a lot more confidence, right? Just interested to check out the Amazon stock chart. Once again, just a little spike here in 2000 that you gotta realize that it's because of the tech boom. But other than that, kind of similar to Shopify, right? We're seeing this very exponential, a steady uptrend. Of course, one of the best stocks out there to have ever existed. But nonetheless, right, when you see a younger one like Shopify, which is only at a $50 billion market cap, but showing that similar pattern, like I said, it's all about that trend and pattern. So with that being said, thank you so much for watching. Make sure to leave this video a like and subscribe for more. Also, check out my technical analysis master course if you want to learn a little bit more details about maybe the specificities on the chart and more advanced stock chart trading. Just the basic chart is already going to get you very far. The course is less than $20 and comes with a 30-day money-back guarantee. And also make sure to follow me on Twitter. Thank you so much for watching, everyone. Make sure to give this video a like and subscribe for more. I'll see you next time. Have a great day.